Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be joining you again to talk about markets. Very interesting week indeed. We've had further record highs on the Nasdaq. We've had amazing runs in gold and silver, uranium turning up, and some great responses from Aussie stocks as well. We're going to talk about all of this and much more after we talk about the disclaimer, which says that everything we're going to discuss tonight is general in nature, has not taken into account personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The rest of the information, the disclaimer, is more important, I believe, because it says that you are responsible for all the stuff you do. You will inevitably endure losses, so make sensible decisions about your money, and it's not me who's responsible for the stuff you do, it's you. Let's get to the nitty-gritty of today's presentation, which is for you to ask questions and me to answer them as best I can. Hopefully you'll learn a thing or two along the way, but if you're new to these, you can ask me anything about Aussie stocks, US stocks, stocks from anywhere around the world for that matter, cryptos, indices, bonds, commodities. As long as I can get a chart for it, I'll give you my best TR reader. Let's head over to the AIC broker platform, and we're going to start over here on the Nasdaq Composite. And that one looks a bit weird, doesn't it? It's very clean, doesn't have any of the support or resistance zones on them. So we're going to head over here where we do have them. Zoom in a little bit. You have to zoom in a bit, don't you, to really see the very small candles at the end. When you've got small candles like that, it means there's not a lot of indecision in the market. There's a lot of consensus. You kind of get to the price on the day. Between trading sessions, things happen. There's information, new information that comes out to markets. Analysts analyse that information. They change a few cells in their spreadsheet to accommodate that, and then fair values change. And the next day, the programmed orders, those algorithms, go to work to reflect that fair value by impacting either the demand or supply side. When there's excess demand, the price is going to go up, and then we seem to find a pretty steady state after that. So it's all very orderly. When we say there's a good consensus in the market, and this is probably the most important thing I'm going to say to you tonight or ever, is that as a trend follower, we really are targeting this consensus. This is our absolute holy grail, where everybody agrees. Everybody agrees that they want to own stocks in the Nasdaq, and therefore you've got a wall of demand and very little supply. And we say that these, where there is the greatest consensus, it yields the strongest, most sustainable, and importantly here, lowest volatility uptrends when there's excess demand. We love low volatility. As trend traders, I can't see anything in this chart that disturbs me at all. Short-term, long-term trends are brilliant. Double greens heading up, seem to be expanding. The price action is higher peaks and higher troughs. It tells me that we're removing supply each time we get to a point of supply gets consumed by the market. Each time we pull back to a point of demand, we pull back a little bit higher than the last one. That's good too. 22.058 is a bit of a level. Only a minor one. The short-term uptrend ribbon is more important. Don't want to see a close beneath that, because that would also coincide with the 21743-804 area. And we might change our risk settings if any of those events occur. But until then, and in the absence of big black candles or upward pointing shadows, we'll stay the course and remain FRP here, which stands for full risk position. So if you are trading US shares, you can have as much as 100% of your capital for trading US shares applied to the market. Let's head over to Australia, where we're going to go through the same process, and that's really all we do here, isn't it? As technical analysts who have a system, not just guessing what the RSI is doing or the MACD. I saw a chart today sent to me by somebody who wants to join our little club here, and it's just pure coincidence that in the background he had a snapshot of a chat group, a Facebook chat group, and there happened to be a chart on there, and amazingly it has my trend ribbons, CC style EMAs. How about that? So it looks like somebody out there has got the AI to effectively replicate my trend ribbons. I couldn't tell because I didn't check the chart as to how good it was, but anyway, I digress. And that doesn't bother me, right? That stuff's going to happen. I put it out there. People are going to use it. That's good. That's great. I hope long after I'm gone, that CC style EMAs are helping people be better investors. But what did get me upset was the fact that beneath the chart, it's a chart that looks like what you see on screen, and beneath it was the MACD and then the RSI. And I didn't know whether to laugh or cry, because it just totally, maybe you could say it's an honour for me to be considered with MACDs and RSIs, but for me, bloody hell, you've completely missed the point. I don't know if you've noticed, but I don't use MACDs or RSIs because where's the demand versus supply equals price in those? How did I get to this topic? I got to this topic because we're talking about process, right? And for me, that's not process. Process is, we have a model, well, my model anyway, doesn't use those things. It's just going through that checklist, trends, price action, candles, in brackets, not MACD, not RSI. So let's go through the process here. Short-term trend is amber. That's a red flag. Bad way to put it. That's a warning signal. It's not a red flag. It's, it's amber. The long-term trend is still up, and that's good, but it is flattening out. The price action is not rising peaks and rising troughs. In fact, it's the peaks are roughly the same, the troughs are roughly the same. But if we go to the period before that, it is definitely falling peaks and falling troughs. We've got a consolidation, but that consolidation is occurring in what is otherwise a supply dominated, the short-term bit of price action. And then the candles are mixed at best. I mean, they're black, white, black, white, black, white. And if we look at the last couple of shadows there, we've got those upward pointing shadows, which I discussed today in the market index evening wrap. And you don't get those upward pointing shadows if there is sustained excess demand into the close. It just can't be the case. In fact, you're getting that when there's still a sell of a rally mentality in the market. And I think the fact that these two last upward pointing shadows are pushing and failing really to progress past these two clear supply side candles. So we've got two clear supply side candles, and this is the best we could do in demand on the way back up. And it's all happening. It's all hovering within the dominance of that candle there. And it's fascinating price action. I've seen it many, many times before. My gut tells me that we're probably going to go down out of this. I hope it's not the case. But it would not surprise me to see us break through 87.31 and go test 86.30.43. And that's at odds, of course, with the Nasdaq, isn't it? And it's fascinating how different markets, what demand and supply manifests itself in different markets. But also it's a lesson that we need to take each chart at its face value and do that work, do that analysis. I am 2/3 risk position here, aren't I? I think on a close beneath 87.31, I'd like to go to 1/2 as a precautionary measure, particularly if it closes with a full black candle closed near the low. And I'm telling you this because I'm only going to see you again on a Monday, which is actually not true. I'm going to see you on Wednesday. If you want to tune into the market index version of what we're doing now, you can tune in on Wednesday. Public service announcement, it won't be like what we're doing on Monday nights because we're going to have a bunch of new people there. And I can't tell them, hey, don't ask me about that crappy little mining stock that hasn't moved in about 3 years. They're going to ask me about that stuff. I'm going to have to, pay due respects and discuss those. So how much you get out of it, I'm not so sure, but you're always welcome to join. I think we've got some problems here. I'm hoping I'm proved wrong. I want to see it close back above 8881. In fact, it's not 8881 anymore. It's that there. So what's that? 4 8s. How about that? If you're, the Chinese love 8s as good luck. And let me tell you, it'll be a great bit of luck if we can close above those 4 8s again. Until then, I'm a little bit concerned and happy with 2/3 RP. Okay, let's now see if we can change our minds on this. We've made our decisions, but markets move in mysterious ways. There are other markets out there that might be a ticking time bomb that these markets just aren't seeing yet, and that's why we do our whip around the grounds. And here again, we're just looking for red flags. I'm not seeing one there in the CAC, so I'm going to move very quickly through here. Not seeing it on the DAX. You say, hey, Carl, that's a bit of a worry because it's just a short-term downtrend. It's actually starting to roll quite hard. It's breaking through previous points of demand there. It's about to interact with it. Okay, it doesn't matter. It's not so bad that we need to. It's going to be a threat to what we've just seen. And eventually, if it is bad, it'll be borne out in the price action anyway. That's fine. Heading over to Asia, fine, no problems. Excellent. Not a problem at all. Still very, very strong and very strong indeed. So nothing to push me off there. Let's very quickly do the ASX sectors, just out of interest more than anything else. We know there are sector rotations within the Aussie market. The big fund managers play their favourites, and you want to be in those favourite sectors. Discretionary still looks fine to me. Energy, not the case, and I fear as good as it looked for a blip there, and funny things happened while I was on holiday. Let me tell you, it just seems to be, it wasn't me coming back and turning the tide on this thing, but it just seems to me back into the old-fashioned energy index of before. Financials is okay. Let me leave it at that. Gold, impeccable. There's nothing like gold at the moment. Healthcare looks still pretty terrible. Telecommunications, there's the two indices there, I think look fairly good. Materials, actually, that's an important candle today. Materials looks better than resources, but they're still okay. Property's fine. Staples is not looking good. Telecommunications looks under some serious pressure there. Bit concerned about that one. And utilities is okay as well. So we're not exactly shooting the lights out there anymore, are we? We had a period not that long ago, with July and August, not coincidentally the strongest. The 2 months together are one of the strongest periods of the year, depending on which look back period. Sometimes it is the strongest. And then we get to September and it all changes, and we're seeing a very different set of circumstances there. All right, going to quickly finish off here with the base metals. We saw them pick up last week. That's encouraging because they tend to go up when there's strong global economic growth, and that's good for stock markets in general. Aluminium still looks okay, but look, it has come off a bit since last week. So is copper, but largely that trend is the improvement of that trend is intact. Nickel, not terrible at all. It's not as terrible as it was, I should say. Lead still looks pretty average as well, but tin and zinc are better on the right side of better. Lithium carbonate, very quickly here, looking at the candles, like it's going nowhere. I think that's what we said last time, isn't it? I think we might have said this trend ribbon is critical, or the interaction with the trend ribbon is critical. If we can get above it, it's got a bit of a chance. Probably it won't, and probably it'll just bump along the bottom, if anything. Let us now head over to the... we're going to go to Firefox, aren't we? I have to keep remembering that we're going to Firefox and not Chrome, because Chrome and OBS don't work anymore. So let me find the screen. What have we got on screen? Silver futures. I did a write-up for you today. If you haven't seen it and you're wondering in the evening wrap, hey Carl, ChartWatch looked a bit different today. What's going on? Oops, no Nasdaq and nothing else. It's all in here, and it's going to be a separate there it is, separate article. Look, assume each day. If there's nothing really to talk about, I might not do it on a day, because why would you talk about something when there's nothing to talk about? But generally there is something interesting going on, and that's where the Nasdaq now lives. And it was a bit of a longer one today, because I have to assume that people have never seen this before. They aren't evening wrap readers. Then gold, which I did the TA for you there, silver TA and uranium TA. So public service announcement. That's where that stuff now lives. But we're going to go back to here and say that the silver chart is impeccable. That last candle is live, so we must discount it, as good as it looks. But even before that, it's still very, very strong. There is a major level there that's not on screen, because those lines are elsewhere, but from the 1st of October 2012. So looking to close above that today, and then it looks very strong, because if we head out to the weekly chart, well, there's nothing there, is there? And that's the important bit. And if we head out to the monthly chart, this is the level, I think, from October 2012 that we're about to consume. There's a little one there. I'm not worried about that. It's pretty insignificant. That's a bit more significant, up in the 50s. And then there's the big one well up there. So that looks very impressive. We'll stay on the monthly chart to look at gold. There's nothing in gold's past. These are record highs, but to show how strong it's looking. And it's got a bit of exponential about it as well. So there's nothing in those charts that are worrying me at this point in time. Happy to stick with those prevailing trends. High-grade copper, I said last week, probably not a lot going on there because of the tariff situation. Iron ore doing its best impression of trying to look okay, half decent, might go up. Uranium, as I said, I covered that before, and the gist of it was that we're seeing an improvement there in its short-term trend, to the point where it started to make me think that we might be back into a long-term uptrend. Certainly if we close above this peak here, I'll be very confident in saying that we're in a new uranium bull market. That is the level, because that's where it started to look good before and then flamed out and slowly picking back up and removing that supply in the system. Look, encouraging, but uranium's an odd one. Things can change very quickly. Heading over to crude oil, flat to middle on Brent. These ones have flattened out a little bit. Not precipitous falls there in thermal coal anymore, and still roughly flat on the coking coal. Let's finish off, well, while we're here, some people I do know like to look at the cryptos, so we might as well do that very quickly for completeness. Bitcoin, it's sideways, isn't it? Neither here nor there. It doesn't excite me at all right now. Bitcoin and Ethereum, actually it looks like it's in a little bit of trouble, and that is a live candle, so we'll discount it, but if it closes down there, it's in equilibrium in the short term, within a longer term uptrend. So it's flat for me on both of those, I feel. Aussie dollar only because we're heading on the way up, looking okay. Nothing exciting. We'll do bonds before we leave, and we know that the Aussie yields are flat on the 2s there, flat on the 10s. That's okay. Flat is good here. This was interesting. I saw the Japanese 2s break out, the 10s also moving up. That just means the Nikkei has to go up. It's repatriation of yen from all over the world. And maybe that's, okay. Click, okay. Maybe that's what's going on here. Is this the 3rd of September? No, that's the 9th of September. So if that was our big black candle, that would make more sense. What's the 3rd of September here? That one. Nothing, really. Okay. It could explain some of the sell the rally stuff. I mean, we go up because US markets are up. We start up, and then we've got some big Japanese pension funds that are repatriating yen, and we've obviously yen's been a major funding currency for a generation, and the Aussie dollar has been a target investment, a yield currency. So maybe that's what's going on. Okay, it's a theory. You know what they say about theories. They're like arseholes. Everybody's got one. 2s and 10s in the US are not precipitously falling, and they're not going up at any frightening rate either, and that's good. So no action here on bonds is perfect for stocks. Let us go back to the AMI Broker screen. We're going to head over here. I'm going to zoom that back to normal, and I've only got one offline request today, which I'll address now and then get to your online requests. And it's from Justin, who's asking for ARV, which is not ringing a bell. And he has said here it's early for a long, maybe still needs to break above the long-term trend ribbon. Well, yes. It needs to get above the long-term trend ribbon, which has at least neutralised. So you've got that going for you. That's not what I want. Let's go back to the arrows, and they're going to be dashed, aren't they? I don't know why it does that. There we go. Now we can see it. Short-term uptrend, price action, if I squinted, is rising peaks and rising troughs. So the beginnings, the foundations of turnaround setup are here. We've got some volume, we've got some interest. It's the sketchiest of Sketchorama charts. So unless it does something, I have zero interest in this, Justin. I cannot explain to you how little interest I have in this. If something happens before you ask me about it next, you're right. I need to see it get above the long-term trend ribbon. Preferably it starts to turn that long-term trend ribbon into a bit of a trampoline, because up until this point it has been the opposite of a trampoline. It's an upside-down trampoline, isn't it? Pushing the price down from it. So we need to see it now form this area of excess demand. I know I've got lots of arrows on the screen, but I'm about to do this because I've spent more than enough time on ARV. Okay, let's go to your requests now. Adonis saying, hope you're well. Just to USA stocks. We'll do the USA stocks at the end. Sonia saying, hi, Carl. It was good to see you at Live. Hello, Sonia. I remember you. Absolutely. It was good to see you as well. My view on Zip and Weebit. Let's have a look. Both looking pretty darn good, I think. There's Zip. You can see we've had a few, now analysed this a few times, and FRPs each time. What's interesting is, we had a similar, I like it, we've got this history, don't we? We can see, FRP, and then we had some interactions here when we went to ZRP. Not a bad time to do it. And then, I don't know, you didn't ask me about it here. I don't know, you start asking me about it here. FRP. And we're just going to do the same thing. I think we're just going to go copy paste. Because I don't think there's anything else we need to do about it right now. Would I buy it based upon that last candle? No, there's absolutely no urgency to buy it because there are lots of things out there that tickled my fancy tonight. For example, and we'll just zoom out and have a quick look at them. And if you're going to ask about these, that's fine. We'll still do them, but I just want to just illustrate the types of charts, the types of candles that we want to see, the types of double greens on the screen, just scrolling down the list, not intending to focus on anything in particular, but just the shapes of these charts for me, okay? Look at that one, amazing. And getting down the list. So these are the template, right? These are the ideal charts for me. And there's different ones in there, like this turnaround place as well. But getting back to ZIP, you'll notice that ZIP's not on the list, not because it's a terrible chart. Quite the opposite, it's very strong. We have a short-term uptrend. We have a long-term uptrend. I know I'm saying the obvious. I know you know it, but this is the point of a process. This is the point of repetition, of doing the same thing over and over again and hopefully getting the same right result. Price action, and you could say, okay, well, I'm not sure about this little bit in here. I'm not stressed out about that. Look, overall, we've still got very solid motive phases. There's a little bit of a compression there. Why is it compressing? Probably $5. But otherwise, I still think it's fine. Candles, perhaps they're a little mixed. There's a couple of black ones starting to appear. But again, I'm really reading a lot more into this than I need to. I think we're still very much in a demand side market at this point in time, and therefore FRP. The plus 1/3, I need to temper that because that would really require on the next demand side candle, that's NDSC, then we could do the plus 1/3. Where Soniums, I'm guessing you've probably got it. Where do things start to go wrong? Certainly beneath there, I don't like that. So if we look at this price there, you can see over here is 437. So you wouldn't say, if it closed at 437, that's a problem. That's at the point of demand. 436 is the point of demand then completely whacked? Not necessarily. These levels can be spongy because by the time it takes for that demand that was there last time to kick in, it's a half-hour delay. It's a very short space of time in the whole scheme of the universe. Half-hour delay, whatever it is, 45 minutes, 15 minutes, 10 minutes. 10-minute delay. The guy gets back from lunch, from his coffee. It's down there again. Clicks the buy button. Sets the computer off to do the program buying. And it could go down a few more cents, right? So, look, what is it? If it's a 437 stock, you might want to go 4 cents, 433, 432 down there. It's that sort of order of magnitude. Close, and then we say that it's been consumed. If it closes, say, 433, 432, and there's no right number, I just went around 1%, didn't I? And what does that look like? Well, it looks like that, doesn't it? Actually, it looks like 432. Let's stick with that. So if you get a black candle that closes on that line, you know that you need to take some risk off the table. I would start at that point, depending on the candle, with a third. If it's a really, really nasty candle, I'd go 2/3. And then we'd be looking at something like a close under here in the absence of other black candles. But I'm just trying to give you a roadmap of how to tackle this if I'm not around. Okay, let's go to the next one. FRP obviously is the conclusion there. WBT is going to be a similar conclusion. This made the broader list tonight, actually I don't mind if you wanted to add 1/3 on that last candle. I know there's a little bit of an upper shadow, but it's still a very strong candle. And I'd consider this candle and this candle together in this instance. I think, you can really kind of blend these two candles together. And the fact that you had this big motive phase here, bit of a pullback. Yeah, the supply's working in the system, but it almost worked through the system by the low of this candle and then back up. Really, it's kind of all one candle to me. And if you blend that, you actually get a very strong candle. So I'm okay with it. I could happily go FRP here if you've got it, obviously, plus 1/3. I don't think you might need to wait for another candle. So that is the definition of something that makes my uptrend scan list tonight. If you don't know where they are, maybe you're a little new, I'll very quickly go back here and just point out that we have these watch lists. And if you don't know how to get to them, there's a link in the email I send you every night with this recording notification that links you to a video with a tutorial on how to set these up. So, and what these allow you to do is to go to not just the feature list, the whole list, everything that you'll see in the article tomorrow on Market Index, and just literally tab down the list and get all of my favourite trends, and that's really what we're talking about. And I think, let's all be honest here, if you go down this list, there are some that have been in there for a very, 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 very long time and doing very, very well. So that's quite handy if you know how to get it. If you are on Weebit, I'm FRP plus 1/3. Where would this start to be in trouble? I think that's always worth discussing. Look, down there, I don't think that's a good look. You ordinarily, if we had something within a reasonable proximity, you would say the last clear point of demand or trough, but they're too far away. We don't want to be holding on all the way down here, do we? All the way down there, we'd never still be in a trade. If we printed black candle after black candle after black candle, we're gone, we're out of there. So look for where the demand has kicked in more recently, and that's a level. And really, we're just pegging that would be minus 1/3. And depending on the candle again, you might go more, but we just need to know where the first point is. We're going to manage our risk. Okay, we'll know what to do to manage the rest and the rest. We know how to do that stuff, but we should always at least know where that first point is. Okay, thanks for those two, Sonia. Hayden's got continuation trends on DUG. Yep, that still looks excellent. That was in today's list, in the broader list, as you might have noticed there when we went back to TradingView. But you also might have noticed it wasn't in the shortlisted, the feature charts. And there were so many great charts. I really was very strict. I won't do it, but if you go back and look at the feature list, which you can do tomorrow when you get the article, those candles closed almost invariably near at or very, very near the high. So this lost a few marks. How much? It's lost half a point out of 10. Like, that's the maximum it lost. But it was just enough just to pip it out of that feature list, but very, very strong. Making the broader list by default, therefore, means FRP plus 1/3. I'm happy to add risk. If you feel that that's the one you like, you might have it, and you feel more comfortable adding risk on this one because you like the way it's traded rather than adding risk on somewhere else, then yes, it's a yes for me. What do we need to look out for? Okay, well, obviously that's a level, isn't it? And I'm just going to draw it to the top of that candle where that supply kicked in, right? And it might frustrate some people. Gee, Carl tends to draw these bloody rectangles all different every time. Yeah, they are a bit different, but hopefully they make some sense. I know the top. We know the top of the rectangle. All we're questioning is, well, where's the bottom of that rectangle? And this candle here caught my eye. And a different candle might catch your eye. It doesn't matter, right? Because we're not there yet. And when we get there, nothing might happen. It might not happen. So don't get too worked up about where the bottom of that rectangle goes. But hopefully you can see some logic here in that. I've picked the top of that candle, not the bottom of the candle, it's the top of the candle. So the top of the candle is where the supply started, right? So anyway, if we get into that zone and we start to do some funky things with black candles and upward pointing shadows, then we might not be so keen to continue with full risk position, but that's miles away, so I'm not too fussed about that. So happy with that one. Let's go to your second one, Hayden, which is LM8, which looks good actually, but doesn't ring a bell. Did I put that in tonight? I can't remember. Bear with me. If I saw it, I would have put it in, and I didn't make the list, and I wonder why now. Very weird. All right, there's got to be an answer to that question. Let's go here, and the first thing I would do is check the turnover filter. So it hasn't met my minimum turnover filter, which from memory is about 200 grand an average daily turnover of $200,000 over the last month or so, right? It's been doing it for a month. And that's not a lot of money when you think about it, 200 grand. And I think I added another one just to try and catch a few more that actually still makes sense is, well, it can have if the last week is double that, so 400 grand. So 200 steady over a month, but if the activity is coming more recently and it's more, then, you know, I'm allowing those in as well. So a little bit of a addition there. But yeah, look, if that was a 1, I know you can't see where I'm pointing. It doesn't make any sense if I put it. It's over there for me, but it's over there for you. There. If that was a 1, then I guess I would have put it in today. And actually, I reckon I would have run this as, I was going to say I would have run it as a feature. And then I'll look down and I said, I want to see a bit more volume. I want to see a bit more interest. Yes, there's some interest coming in, no doubt about it. But, you know, something like that, it might have even made itself into a feature. But no, in the meantime, very happy with this one. FRP +1 third. And I didn't talk about why, but I'm kind of assuming you know why. It's a turnaround setup. Short-term uptrend is in place. Long-term trend ribbon has turned to amber. Remember that first one we talked about today, ARV? That hadn't happened. The long-term trend ribbon is doing the trampoline thing. Remember that one we started with today wasn't doing that. We've got some interest. We've actually taken out, I think, today a point of supply. So all ticks for me. Happy with that one. LM8. And Hayden saying FRP and liking LTP. We're flush with acronyms tonight, and I know what he's talking about, LTP. They're not a great day today, but not a deal breaker. I think we're still okay here. Above average volume, there's a bit of supply hit today, wasn't it? A bit of supply. Yes, we gapped up and we found supply. So that's a little bit concerning. We didn't quite close on the low. That's helping me. I think we need another day here. I'm not going to panic over that one. So still FRP. I wouldn't want to see a candle that looks like this, you know, or variation of. And I'm going to fill that in. So let's go here. Yeah, that would be really nasty. Any variation of that with even an upper shadow. It doesn't have to be a full body, but supply starting towards the top of the candle and closing near the low. That would concern me. I think I'd just knock a third just for safety if I saw that. But hey, I can't see it. So let's give it another day, I think, on that one. From Roscoe, BRE turnaround. Yeah, look, this is appearing a few times. I want to say I put it in on that day. So no, that kind of makes sense for me to do something like that, doesn't it? I definitely put it on that day. I definitely put it on that day. I definitely put it on that day. Definitely put it on that day. I'm not sure if I put it in tonight in the broader list. I can't recall, but it could go in. That's not a bad candle. That's still a demand side candle. Long lower shadow, closed near the high. So no troubles at all for me on this one. Happy holder. I'm just going to get rid of those. So I want to zoom out. Okay, so that's what I was looking for. Out of the corner of my eye. And again, I'm going to hit the top of that candle right there. And let's make this red. Red. For supply, of course. And, okay, so look, it makes sense that we're slowing down a little bit today, doesn't it? No surprise there at all. Now I'm curious, well, what's above that? Okay, well, the good news is nothing's above that. The bad news is there's a bit there, isn't there? It's pesky. But it's not significant enough today to cause that to be a black candle. We just saw what was a concerning candle. And actually, look at the volume today. My gosh, there's some supply up there, but it's pretty minuscule, isn't it? It's benign, and I think we're on the way to consuming it. So yeah, look, I'm actually probably more happy with that. Not probably. I should take those probablys out, isn't it? I'm more happy with that now. So happy holder. Let's go FRP. I don't mind the +1 third there, actually. I can see why you'd do it if you want to wait for a white candle, stronger close, whatever. That's your prerogative, but I'm happy to go. DEV is more aggressive, Roscoe's saying. Let's go DEV, Devex. It is more aggressive. Yeah, but you could do it because it's meeting the rest of the criteria. Would have loved to see a better close today. That's all. So what is the aggressive setup? Well, we've got that short-term uptrend. We've got price action, that is rising peaks and rising troughs. It is actually, even if you account for that little dink in there, but it is, and I'm just doing them a little bit rough here, but there's a little one in there, but it's still rising peaks and rising troughs. Do we have some interest coming in? Yeah, I think we do. I think there's some interest. Do we have a big base pattern? Yes, we do. So it's got all the hallmarks of the aggressive setup. And typically what we like to do with the aggressive setup is get it with enough reward to risk, or one-to-one reward to risk, until we hit that long-term downtrend ribbon. And the reason why we want to have that minimum one-to-one is, well, why would you risk more than you stand to make? And then you will ask, well, how do I know that's all I'm going to make, Carl? Okay, well, we don't. You're right. We don't know that that's all we're going to make, i.e. the long-term trend ribbon, the dynamic supply that we believe to be there, but it has been, pretty reliable in the past. Now, when we get close to it, it kind of rules that out, and then we kind of have to be a little bit patient and wait for it to go. It gave you that sort of that cutoff. We can get above the halfway point, then we can sort of, we're close to the top of the bloody thing, aren't we? We're closer to looking through it. And when we look through it, well, what's your reward to risk now? It's completely different, right? And we're certainly there today. So tick, 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 Roscoe, on your understanding of my model for the aggressive setup. And I totally agree with you. And the only thing that would hold me back is the fact that upper shadow didn't quite bottle it, didn't it? Didn't quite close above. So yeah, maybe another candle. Just another any high close, right? Another demand side candle, and then we're aggressive setup here. So I won't do the plus third, but let's go next demand side candle. Then plus a third. You could do a sixth if you're not that confident, because this is risky stuff here. I mean, this stock is, for all intents and purposes, I shouldn't use the word is, but it was a piece of junk. Let's face it, a total piece of junk. I mean, just a total dud. The only thing this thing is mining is shareholder funds. Let's face it, okay? Sorry, the only thing it's mining successfully is shareholder funds. Let us not split hairs here. And this piece of junk has finally, whatever, you know what they say about the sun shining and the dog's rear end. Holy dooly, fantastic, no qualms, right? I'm not a value investor, right? If it's going up, I'm happy to buy it. But let us understand that this is a piece of junk. But any piece of junk can go up too, right? Uranium prices going up, we just talked about that. All the other uranium stocks are going, and eventually the most shittiest one will probably go up too. And here we are at Devex Resources. So let us treat it with caution, I think was the message there. The message wasn't to denigrate. It's the good name and standing of Devex Resources for 5 minutes straight. The point I was trying to make is let us be patient and wait for that extra candle with the high close. Okay. Because, no, I won't say that's fine. It's all good. It's all good. And these things can turn into, something brilliant again. So we only care about the price action. What I was going to say is there's so many other great charts out there, and there are, but at the same time, we still want to get that mix of setups, and I still want to have aggressive setups because you have seen these. I don't need to tell you. You know this. Give me a thumbs up. When these get going, they're better than the most boring old continuation trend. Is that right or is that right? There you go. That's why we want this mix of setups. We can do the boring bottom left, top right, and they're still good, but we know that the fun and the excitement and the 10 baggers they start like this. And the problem is with everybody else, right, that they're trying to pick the 10 baggers here, okay? And I've taught you something so special. It took me 20 years to figure this shit out, that we need to wait for this particular stuff to happen. You're welcome. Okay, let's go to triple witching. Roscoe says, is triple witching important? I don't know, you get a little bit of extra volatility. I might have agreed with you many, many years ago when I was sort of more watching market depth and trading in the moment. Now I look at end of day charts and, at the end of the day, whatever will be, will be. Peter's got, Peter, it was your friend that sent me that image that I had talked about at the start. So yes, I'd be curious to see who that Carl's CC style EMAs. Peter has got FXG, which is doing extremely well. And Peter, no problems. I'm going to welcome him with open arms, as I have everybody else. Everybody's welcome to join me on a Monday, okay? If you want to tell your friends, tell your friends. If I don't turn up next week, no harm, no love lost, all right? You know, don't worry, I'll be here next week. But that's the way we all approach these things. FXG, let's go, FXG. I think that's looking pretty good. I reckon I've got one or two of you listening tonight holding this one, which makes me feel really good about it. And I hope you're still holding at least some of it. And I'm sure, now don't tell me if you're holding it, but give me a thumbs up if you've done your absolute best to sell this too early. Yes or no? I'm looking over here, that's where your reactions are. No, good. Feeder's holding on. Okay. So this is the thing. We say this almost every week. It's hard enough to get the good one, right? Oh, I never get Carl's good ones. He puts 20 out there. I buy 19 and they're crap, and the one I didn't buy, that's the one that goes. It's hard enough to get the good one. You need to hang on to the good one, right? And this hasn't given us a single candle. Look, I mean, is it fair to say this is the worst candle here? Like, that's the worst candle there. Since I don't know when did I put it in here? I can't remember, or here. Flipped if I know, right? And hopefully you added some risk. You're starting to figure this out. It's like, okay, when I get a good one, I need to add to this damn thing, because I only need a few of these, like 4DX or something, a year, and then I don't need to look at the market for the rest of the year. And I'm getting it. Carl keeps just banging away. Like, that chart just keeps appearing in that list. I'm starting to get how this works. Okay, so the hanging on bit. Okay. That's the worst candle in this whole run, and it's akin to the one we looked at before, where we said, we don't like it. If LTP, and okay, well, we'll give it another candle. All right, you gave the next candle. It wasn't great, but certainly no reason to sell. None of these are reasons to sell. Ergo, you have to still be FRP here. There's absolutely, it's giving you zero reason not to be FRP. I could add a third on that last candle. Could it be better? Yeah, it could be about that much better. But it's still it's a very strong demand side signal. And what I like about it is everybody thought they were going to get that pullback today, didn't they? Like, every other person out there whose brain can't process how this can go up so much in such a short space of time thought at the bottom of that candle, here, that's it. This thing's cooked. This is the pullback. This is where the pullback starts. And then how did it finish? Right, this thing ain't cooked. Having said that, disclaimer, I don't know where it's going. Wouldn't have a clue. It could go down tomorrow. I don't know, but that's not relevant to us. We're going to trade what we can see. FRP plus 1/3 on that one. Okay, where? So, Sanjay, I don't know if you're here tonight, but congratulations on your 4DX. I caught up with Sanjay. Remember, I said, I think I sent a message. I said it. I was going to be in Sydney. Send me an email or whatever if you want to catch up. And Sanjay took me up on that. So I went and had dinner with Sanjay in Sydney, and he was on 4DX, and I was able to give him some tips on how to extricate himself from that one, which he did. So that's good. So Sanjay, congratulations. Let me do the same for the people on Felix Gold. There's quite a lot that needs to happen, actually. Sanjay's here. Let's go. Well, look, it's hard, isn't it? That one there, definitely, that's a long, long way away. And even there, maybe we're just setting a roadmap here, aren't we? Oh, you could even go here. Like, these for the people that are in it, and they're doing really well, right? I mean, we're just having a roadmap for where, if stuff happens, and it can't just tick all these levels. It's got to close beneath this level. A candle that we know, I know is not the right one. But maybe let's look at it at that and just have a roadmap for where we're going to act. Because as much as we need to hold these all the way up, we still need to have plans for locking in some profits, because it will flame out at some stage. It's not going to last forever. So let's work on that basis. Why those points? Because those in themselves are points of demand. Oh, but Carl, the last trough is down here. The last point of demand is, yes, I agree with you. I totally agree. And if we call this point A, and we call these points all points B, they're all point B for me. They're the same thing. And point A is more significant than point B in terms of its importance and where demand is likely to come back in and cause a rally to protect your exit, A is just too far away. So we need to kind of, in a practical sense, find these Bs that we can peg some reduction of risk around. Okay, let's keep moving. How are we going here? Michael has got CTT as an aggressive setup. Oh, wow. Okay, I had to look. Because this was one of the ones, and you probably all know, some of you may have shorted it. It was in my short list, short or downtrend list for such a long time. And it fell from, I don't know where I started, maybe on that day there, I don't know. I haven't looked at it for a while because it just hasn't been appearing on the scans. And that's why I thought, CTT, that's a bit cheeky, but not cheeky anymore. Okay, and nothing goes down forever. And we don't hold, I don't think we want to anchor ourselves. Oh, that stock was a great short, that thing will never go up again. It's just not how these things work. So aggressive setup, but the problem here for me is we're almost a bit late, if anything. I can see on this candle here, and I don't scan for these, right? So I won't see them. That's probably the candle there, Michael, don't you reckon? And maybe you could argue it could have closed a bit better, but otherwise we have all the hallmarks of the aggressive setup. Do we have a massive base pattern? We do through here. That's a good three months of basing. Have we seen it? We actually have seen, that's a decent, look what happened through here. No interest. And then some fund managers, all you're seeing there, ladies and gentlemen, is some fund managers have flicked the switch. They did the research. They probably started researching it here on this day. Oh, Cettire is looking a bit cheap. Oh, that's the value investor's brain. Oh, let's start looking into it. I don't know, 3 months. They ahed. They tossed it up. It went to the morning meeting. It got rejected. Oh yeah, it's looking good. It's great value now. Okay, start buying. We allocate $30 million. I don't know, whatever, right? And then the buy orders started hitting, and they chewed through. There's still plenty of supply. How do you know there's plenty of supply? Well, look, it's a piece of junk, right? There's still lots of funds out there supplying it, and these guys interacted with them, chewed through it. And, oh, geez, that was a good buy, wasn't it? Value always wins, and up she goes. But see, we're okay. We're just going to piggyback these guys, and we want to see how that excess demand, that switch from excess supply to excess demand, manifests itself in the market. And it can only manifest itself in these ways, ladies and gentlemen. This stuff has to happen. It's impossible for it not to happen. Black candles have to turn into white candles. Upper shadows need to turn into downward pointing shadows. Lower peaks and lower troughs must turn into higher peaks and higher troughs. That pink ribbon needs to turn amber, then green, and that big bloody caterpillar up there that's pink must turn orange. Now that would be a turnaround setup. We're not looking for that. We're looking for the aggressive setup. Maybe it's even here, isn't it? Like you could argue as early as here, and that's the point of an aggressive setup. And all we'd add there, we just put a sixth, or whatever, $50, $100, whatever tickles your fancy, just to have a little crack at it. Just operating ourselves like that hedge fund manager. We don't have to be all in and all out on just 3 or 4 or 6 stocks. We can have little bits of money just working away, working these angles. And if it doesn't turn out to be the right thing to do, if Cettire proves itself to be a piece of crap, and it is possible, it's less likely if we're ticking these other boxes I've taught you, but it's still possible, then all we've lost is that little bit of money. But then we add, and we add, and we add. So that by the time it gets over halfway through the trend ribbon, which is kind of what it needs to do now, because we're right up against it, and it could still do this, right? Because it's done it before, then we've actually got a decent position that matters, and we feel like we're in at the low as well. And that helps us, that big base, that if we can get a nice base in, nice early, we can ride this thing to $2, $3 if it goes all the way back up. And the value investors start to sell because it's overvalued. And reversing the theme, isn't it? Reversing that narrative. They're my narratives, I know I trash narratives on X, narratives like, lots of people are going to drive electric vehicles. And that means we're going to need a lot of lithium. Yep. That's a narrative, right? The stuff I just spoke to you about there, and that's a narrative too. Do I know that stuff's happening? No, but it sounds pretty good, doesn't it? But it makes a lot more sense when you talk about it in terms of demand and supply than you talk about, oh, we're going to be driving electric vehicles. I'll stop doing the voices, I promise. Let us keep moving, and we're going to go to Perry, who's got IDA, which I haven't seen, and I'm guessing it's because we are not meeting my turnover filter here, but that doesn't mean it's a bad stock. It just means it's not meeting my turnover filter. And this is obviously a ripper. And you could say, Carl, you're not giving me enough good ideas. Can you get rid of your turnover filter and then you can give me these as well? I said, okay, we're starting to push the boundaries of what's safe, because with less liquidity comes greater risk as well. But that looks great, no complaints. Obviously, if I could see it, I'd be all over that thing. So FRP plus 1/3. BGD, oh, well, that one is on the list, and that was a feature tonight, so that one looks fantastic. So all I need to do there is copy and paste just that one, because we don't need, you cannot possibly get a better candle than that last one, so we don't need to wait. ASL also was on the list today, and I don't have, I haven't looked at this one before in these sessions clearly, but it has been on the watch list several times. So FRP plus 1/3 on that one looks fantastic. Feature chart, then SKS, which has been in the watch list so many times, and obviously we've talked about it fairly recently, and I've got to get rid of the next demand side candle because we don't need that, because that last candle is as good as you can get also. So four excellent picks there on from Perry, and I might just go back to that IDA, and just in case it does meet the turnover filter down the track, we want to know that we identified it here also, don't we? Evan asked about Ford DX, which it's a good day to ask about it because we can see we've got some problems today. It looks like I did some analysis on it not that long ago, last week, I can't recall, and I've pointed out a level here, and I've pointed out a level here, clearly. I've also drawn this. I can't remember what I said, everybody. What did I say? Along the lines of that, and I'm along the lines of that. Correct me if I'm wrong. Did I say something else other than that? And then I think we're kind of done here, aren't we? I can't see a path here to still having any risk on this one. So can I say ZRP? If I said something different, please let me know. I'm not sure why I didn't label those, but... And that's a good thing about if you actually have a system that's consistent, you can look at a chart and go, well, what else? Oh, I couldn't have said anything else at those points, getting some thumbs up over there. So I have addressed this one, which is a big relief. I didn't want to leave you swinging on this one, did I? So minus a third is a yes for me, Evan. But I think we're much further along than that. Okay, and hey, I hope this goes back up and we get another chance to trade it into $5. It's just not going to be right now. Let us go to, Hayden's saying, but that's a different person, so I'll get to that in a second. I thought that might have been the same person. SRL, yep, I do want to talk about this one as well, because it threw in a really, really strong signal today. So I'm happy to go plus 1/3 on this also. There is a little bit of an elephant in the room in this candle here. So this one didn't make the feature today for that reason. If that candle wasn't so large, dominant, I would have made this feature. It's not far off it anyway, and you might, if you argued, hey Carl, I know that candle looks a bit scary, and I know you don't like big black candles after strong moves like that, big ones, but it happened for a logical reason, Carl. I'd argue that really was a function of $5, and we shouldn't be surprised that we saw that sort of reaction on a stock that obviously had got pretty hot, but then it didn't continue, like it didn't perpetuate. The fear that was instigated by that candle which caught so many traders who bought in at $5 off guard. You know, all the traders, Carl, that got in up here, that thought this was going to the moon, and then absolutely was just berating themselves the next day for once again having given up, lost their will, and purchased at the top after knowing they should have bought all the way below. That fear and loathing, Carl, in the market didn't perpetuate. It didn't continue. In fact, what we got the next day was actually something very strong, and we actually got a little vibration between two round numbers at 5 and 4. So 5 was expensive temporarily, and then 4 was cheap. And then today's response, I think, is very, very strong, telling us that actually this thing still has some legs. That area is a point of supply that I think will be significant just because of what happened there. But I don't think it's insurmountable, and that's why I can go with the plus 1/3 here and not maybe ask this to do a bit more like a dink or another candle. I think that's worth, based upon pedigree, giving that a go here. Okay. So just talking you through some of my logic behind these things. I mean, it's one thing to put up a list of stocks, isn't it, of 20, 30, 40 stocks that I do each day, because they're the ones that look good. But there's nothing to be able to talk through each one and say, well, that's why this setup's better than the next one. And that's something, correct me if I'm wrong, I hope that AI can't replicate yet, and you can only get on a Monday night and, when you hang out with me. But hopefully starting to sink in as well, something that you could take away after each Monday. XYZ, we have other problems here, I think, and it's just gone sideways. I think it's in the too hard basket now. So yeah, with everything going so well elsewhere, you have to question why you would persevere with this. It doesn't look awful, but it's just, surely it's a time stop here. It's a time and frustration stop. It's not a price or a loss of capital stop. It's a time and a frustration stop. Knowing that, look at it this way, right? Like, I'll give it $5. If it closes at 125 with a big white candle, I'll jump. Whatever I just sold, I'll put back into it. But if it never gets there, then geez, I'll be just as glad, right? And I'll give us more than $5, about $8, But $8 on a $12 stock, right? I mean, I'll concede that. Just, what is my sanity worth to me in terms of not tuning in and looking at this and seeing it hasn't done a whole lot today, and all the other ones I didn't buy with this money have gone through the roof. So call it a sanity insurance policy, really, of $7. That's all you're giving up. You can always get back in. Let's go to IPX. Now, don't put any more in. Sue's the last one. I won't go past Sue. IPX, which is that one there. Oh, we've got some interesting, some problems here potentially. Close below, managed risk, minus 1/3. Yeah, yes, but we haven't got there yet, so that's okay. We tickled it here. And a nice candle here. So look, I think I know it's frustrating sometimes when you do move the goalposts. And if you ask me in about 2005 to 2010, when I started getting into systems design and working on algorithmic trading systems, the thought of moving a stop from there to there would have been mortifying. I would have said, you never do it. But that was before I understood that, well, you have to just stop being so rigid in your views of the market and start to listen to the market. And points of demand are not so rigid. There's demand in the system. I mean, we want to get out when that demand is consumed, right? So if that demand has moved from there to there, then it would be silly to keep that there. It'd be silly. That doesn't mean anything. That means something now. So anyway, we've got two important levels here. Today's candle is important. It's critical. And maybe that's your compromise. It's the reason why I drew that there. So maybe that's your compromise, right? It's still about the same price, but it's under a level that makes more sense, and then that might be second, third here. So we're just hanging in on the risk that we have. I think we have taken some off the table. I don't think I know. I mean, that's why I wrote that last time, didn't I? Do not pass go, do not collect $200. That candle there is take some damn risk off the table. And I'm surprised I actually only wrote 1/3. So I think we know that's more than a 1/3 candle. And it sort of went clunk, didn't it? And didn't really bounce back. And then that's a big problem there as well. And we're just sort of dealing with this last third, if anything. And I think that's maybe what I was saying here. We've kind of got 1/3 left. So on that basis, I think we can hang on to that last third and see where we go. As for adding risk on this, because today's candle is impressive, I actually really like today's candle. I just want to see just a little dink. So you might see something just like this, and then it's on that next move that I think you can add the risk. But today's candle is good, it's encouraging, but it's still a little early. Today's candle is, look, be more confident in hanging on to the risk that you have. There's actually an attached question that Evan has to that. They're both traded on the US market. Should we be referring to the US charts or the Aussie charts? And the answer to that is pick one and stick to it. Don't cross-check. Please don't cross-check whatever you do. Base all of your decisions on the US chart or base all of your decisions on the Aussie chart. Which one? I would suggest the one with the greatest market cap trading there. Okay, so where there is the most demanded supply. NXL for an aggressive setup. Yes. So it's meeting those basic hallmarks, and this is exactly why we respect the long-term trend ribbon, because I don't know why, I can't explain it. Is it because it's 3 or is it because it's my ribbon? We'll never know. But yes, there is supply there, and it looks like a decent whack of supply as well. So yes, potentially an aggressive setup, but it needs to resolve this issue here, and we might see just a little dink, and it's on those next few candles that we could start to entertain it. I definitely need to see it close above the midpoint of that ribbon. Strong white candle. But there's still a few candles that need to happen, but you've got the basics, I guess, in place there, Michael. Let's go to Roscoe. Did I miss AIC? Did I miss AIC? I might have missed it. AIC. A1M. Okay, good. Glad you corrected yourself, because I would have been typing away and getting nowhere. Have you missed it? No, I don't think you've missed it. On the contrary, I've seen this as well. I don't think I've put it in my list yet because I just don't believe it. I don't believe it. And you've heard me say this many times, the leopard very rarely changes its spots. And look at the spots on this leopard, right? This thing's a basket case. I talked ill of another stock earlier on today, and I could equally talk ill of this one. If you own this stock and you think I'm speaking ill of your stock, I don't think you are. I think you're agreeing with me. You're nodding, you're going, yep, Carl, this is a piece of work, I tell you what. So, a few thumbs ups there. Okay, so this needs to do quite a bit for me. And I just don't think the price action is clean enough. There's some interest there, and it's something I do look at, I do watch, and I do think, is today enough? And I haven't answered that in the affirmative just yet, but it's on the radar. Hayden saying, yep, I'm now ZRP, followed your roadmap to an exit, many thanks, excellent. I can't remember exactly which one that was on, but that's all good news. Might be 40X. Hi Carl, thoughts on US stocks, and we'll do those very, very soon because we're pretty much there. It was 40X from Hayden. Sue's got one last Aussie stock before we head back up the list. Hi Carl, can I please get your thoughts on GDG? Which, not a great candle today, was it? But otherwise, impeccable. Minus a third, as today's candle wasn't good. Okay, we'll talk about that in a second, Sue. And CCL, which we'll do in a second. Okay. Is today a minus a third candle? I don't think so. I think you've jumped the gun a little bit there. I get why you've done it. It's not a great candle. It's fallen from the previous one, but in and of itself, it's pretty minor, isn't it? I mean, look at the size of the candle. Yes, it's black, but it's small relative to the other. I get you still need to fill in the fact it's fallen from the top. I get it. But in terms of the price action on the day, there wasn't a lot of panic after that initial drop. A little bit of a lower shadow, so a little bit of demand coming in at the end there, and we've talked way too much about that candle. Just look at the rest of it. The rest of it's fine. So for me personally, applying my methodology as me, I would not have exited a third today. I would at least give it another day. At least a day. It could be another couple of days of candles that are far more meaningful than that one before I lost any of my risk on this one. But, you know, it's not the end of the world. If you took a third off the table, that means you've still got 2/3 left, right? So we'll see how we go on the rest. In terms of where you might want to manage your risk on those, well, that white candle is critical, isn't it? I mean, can I suggest that you could have, dare I say, should have, so is it fair to say at least waited until we closed beneath the bottom of that candle where the demand began? Maybe that's your next point there, to manage a little bit more risk. That's where I personally would have done the first one. And then we've got a bit of a level down here. And then we're starting to interact with the short-term trend ribbon. But lots of stuff will happen before we get to those, but just creating a roadmap. Let's see your CCL, and then we'll head back up the list. And looks fine to me. I can't see anything that looks really, really bad there. Sue saying, not sure what to do, as it always gets sold down close to $4. Yeah, probably. And it does look like a stock that has $4 on its mind, doesn't it? And particularly if you see things spend a bit of time at $3, well, you know, they're making 33% profit, aren't they? If it spent a bit of time at $2, well, they're doubling their money. This one probably not that applicable. But yeah, a little bit of $4 itis. But otherwise, I'm not too worried about this. It still looks pretty strong. There's no long-term trend ribbon, of course. It hasn't been around long enough. The price action is still solid, you know, still rising peaks, rising troughs. I think the candles are okay. Yeah, there's a sprinkling of black ones in there, a couple of pesky little upper shadows, but there's still some decent ones working into the system as well. I'm pretty happy with this one. I would think differently. I can see one candle there that stands out as a point where I would, you know, I wouldn't like to see it close below. So that one, and then, you know, some under here clearly, and then, you know, we're starting to interact with the short-term trend ribbon from there. But, you know, look, I'm a happy holder at this point in time. FRP. Could I add? I wouldn't add risk obviously until we saw another decent demand side candle, but in the meantime, yeah, FRP. Let me just copy and paste that over, and I'll just qualify that by putting in between NDSC. Because I still think that's where we're headed, is adding risk on this one, hopefully, and not reducing it. Okay, let's head back up the list. We're going to go to the trading view screen and do our US stocks. There it is. And we're going to kick off with Perry, who's got CM. CM looks like the first one. CM. Canadian Imperial Bank of Commerce, which looks great. Let me zoom out and see if there's anything in the corner of my eye there that I need to worry about. And there isn't. Looks even better. And it's just part of a very, very strong banking sector. Perry, you've probably noticed that banks, US banks, North American banks are doing very, very well. Bond yields are coming down, I guess. So bond proxies, so these are going up. They're well supported. I could find other fundamental reasons, but that's a macroeconomic reason. So yeah, happy to ride the trend here. I can't see, there's nothing in the chart that worries me at all. It is the perfect chart, and therefore FRP, if you've got it, plus 1/3. If you don't, and let's click save on that one. Let's go to Perry's second one, which is APP, which is AppLovin, if I'm not mistaken, which I don't have the markings here, maybe because we're in Firefox, not the other one, but I'm sure we've done this one before. Maybe if I went to one of these other ones, we might have some. No, that's APP. I know we've done this several times. Oh, so we've had some stuff there, and the problem is, depending on which one of these I'm in on a Monday night, will determine where the markings have gone. But I just want to remember, well, they're not there either. But I know, and you know, we've done this several times. Let's go back here. Okay. We're going to end up with the same result. And I'm sure we've done it before. But 1/3. FRP plus 1/3 for what is also the perfect chart. Great trends. Immaculate price action. How many white candles in a row? I mean, just look at, like, seriously. 3, 4, 5, 6, 7, 8, 9, 10, 10. Ladies and gentlemen, here's a bit of a hint. When you get 10 black candles in a row, they really love it, all right? They're chomping at the bit to buy it. It's programmed by orders. It's pervasive excess demand, okay? 10 white candles. Did I say black candles? 10 white candles in a row. 10 white candles in a row. That's amazing. Happy with that one. Let's go to STX. Seagate Technology. Well, that's an old one, isn't it? Seagate. Correct me if I'm wrong. Were they making hard drives and things like that back in the day? Let's go back to, yeah, Perry's saying yes. Let's go back to the weekly chart. 1 month, 1 month. Let's go 1 month. I mean, this is old. Like, this is proper old. Oh, I reckon it goes back before that. We just don't have the data for whatever reason. Let's go back to here. Perfect chart. Short-term, long-term uptrend. To talk about white candles, ladies and gentlemen. I mean, sometimes in Australia we just slug away, don't we? Plug away, slug away, and then it just seems so easy over here. Brilliant chart. Thanks, Perry. And his last one, I'm sure, will be no worse than perfect as well. Well, can't argue with that last candle. I'd love to get it 3 candles ago, but we can't go back in the time machine. And it's just, it's only doing that because it's a picture of demand. I know nobody listening tonight will buy this one because they're going to think they've missed it, but that's just not the way the market works. It's just not the way the market works. You can't have a candle like that if you've missed it. It's just not the way the market's thinking. It's the way that you're thinking. Oh, I've missed that. I've missed it. But think about all the people that were in the market on this stock on Friday. They weren't thinking they've missed it. Thank you, Perry, for those 4 excellent setups. Let's head back up the list. I need to do Justin's one before I forget nearly. And actually keen to do this one, MSTR, because he's asking about this one as a short. MSTR, get it right, because there's MicroAustralia and there's also Monster Beverage. I don't want to mix the two up. This must be the one, because he says below the short-term trend ribbon. I think he meant long-term trend ribbon. Oh, it is below the short-term trend ribbon, but it hasn't broken the long-term trend ribbon. You're correct. Yes for me. Look, obviously not now, but if it does what you are saying it will do, decent black candle, closed near the low, beneath that 320 level there, I think you can. I would put to you, this can't be the worst chart you could find in America. There's got to be worse charts than this. I know there's some good charts out there and it's a very strong market, but surely there's better ones than that. But, I mean, look, it's shown substantial resilience at that long-term trend ribbon before. But yes, even to the point where, it has closed beneath there and then just straight back up again. It hasn't had as much of a prolonged period though, has it, at that ribbon? So you're right. This one might be the one, but I do think you want to wait for it. And kudos to you, Justin. Justin is here tonight in terms of actually looking for shorts, because if the what falls out of this market, you're going to want to have some insurance in the system. Okay, just the reason why I'm pausing is I'm trying to make sure I haven't missed anybody heading back up this list who wants to talk about US stocks. And I think I'm going to get to Adonis here, and that's it. If I've missed yours, please let me know. But let's go to WFC, Wells Fargo. We talked about that very strong banking sector, and there's another one there. A little bit of that coiled spring look to it, Adonis, doesn't it? I like the little base pattern it's got going through here. 3 very solid candles. Nice little volume push on that last candle, telling us that we consumed the supply there. That's always encouraging when we see it. Zoom out to the weekly chart, and we're through here. So very happy with this one. No complaints, and it's as good as any of the other ones I've seen tonight. So we'll go plus 1/3 FRP on that one as well. It's always reassuring when we see stocks from the same sector looking good at the same time. Google, which I'm curious, there's been a lot of talk about how ChatGPT OpenAI is eating Google's lunch. Doesn't look that way, does it? I think Google's doing pretty well with its own lunch, looking at that chart. So very happy with that one. Looks like we've had a little bit of a interaction on that before, so we'll drag that FRP and put it up there. I think you can be pedantic, too pedantic sometimes with the last candle. I'm not too fussed about that. Happy to go plus 1/3 on the basis of this one's pedigree. Now, let me just make sure that there's nothing out there to worry about either. So I'm happy with that one. Also Adonis. And that's it. I think I'm done. I think we're all done. I'll just come down to the bottom. I don't think I've missed anybody's requests there. So let's head back to the PowerPoint and remind everybody that everything we've discussed tonight is general in nature, has not taken into account your personal financial circumstances, objectives or particular needs. So before acting upon any of this stuff, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. More important, of course, is that you will lose money at some stage. Hopefully it's not in any of the setups we talked about tonight, but it's going to happen. So be prepared for it both mentally and financially. Ultimately, it's you who's responsible for all the stuff you do, not me. That's it. Let's head back here and thank everybody for joining me this evening. Hopefully you enjoyed it, got lots out of it. I certainly enjoyed being here with you. All the best for your trading and investing. Until we catch up again. Bye-bye for now.